This is an interesting valley. Who in the valley is on the Rubenstein wish list of peer-to-peer? I know you want to talk to Greta. Everybody else does well, but where's the dream interview for Rubenstein in Happy Valley?
Well, I've never interviewed you. I think that would be
frightening.
That would be a dream interview, really.
I think it'd be a change, and I'd like to interview you. I have some questions.
So do some other people.
You're not alone.
So there are a lot of interesting CEOs and heads of state here. Some of them do interviews, some don't do interviews. So,
right.
We've had, I think here there's several British prime ministers. Boris Johnson's here. I think Theresa May is here. Tony Blair is here. David Cameron's here. So that'd be interesting to get all four of them on a panel, wouldn't it?
I want to talk about a panel I would have with you right now, maybe a few others within the Carlyle world, and that is this strange word, scale. Where is scale going within our transactions and our combinations?
Well, scale has, for a while before the Great Recession, buyout sizes were fairly big, and some of those didn't work out, the biggest ones. Then we went through the recession, and people have been nervous about doing too large a pure buyout. Though the biggest buyouts they've ever done, some of them have worked out. I saw Michael Dell, he's here, and he did maybe the biggest buyout, maybe one of the most successful ever. But generally, buyouts have been recent years, and the big ones have been in the $5 to $10 billion range. There have been very few $15, $20 billion ones. Some are now reported to be being considered, but it's harder to do a $15, $20, $25 billion buyout.
David, talk to me about how much things have changed over the last several decades, and go back to when you started and what it was like. There's more firms with more money doing more of the things that you've always been doing. Does that make it harder?
Well, there's a bifurcation. When I started Carlyle, there were 250 private equity firms in the world. Now there are 8,500. But there are 3 or 4 that are really at the very largest size, and there are maybe another 10 that can do very large deals as well. And so those are seeing the biggest deals and getting the best financing and so forth. So it's different. The biggest changes since I started Carlyle with others is, one, there are more investors interested in this, retail as well as sovereign wealth funds, which didn't really exist that much before. Secondly, the large private equity firms are now publicly traded, and so they have their own public following. You also see the large private equity firms doing more than private equity, private credit, infrastructure, real estate. So they're diversified a fair bit. And those are some of the biggest changes. But also, rates of return have come down. It used to be in private equity, people wanted net internal rates of return of 20%. Today, if you can get net internal rates of return of 15% per annum, people were happy with that because interest rates are so low.
I'm told now that raising capital is the easy part. Deploying it is a whole lot tougher. Is that the right way of thinking about things at the moment?
Well, the people that have to raise the money don't say it's easy, but it's not as hard as it has been historically because private equity has now been accepted as a real asset class. It's not alternative. It's mainstream in many ways. And also, the sovereign wealth funds and the U.S. public pension funds have so much money, and they've made so much money on public equity returns and also private equity returns. They have to deploy it, and they're giving it to private equity firms, in part because they see it as a hedge against a recession. If it ever happens, people think that private equity firms can work through the recession the way they did last time reasonably well.
What is your counsel to the successful tech firms? Your wonderful interview a few years ago with Jeff Bezos and others. They have an immense challenge of ample free cash flow, above average revenue growth as a general statement as well. What is the Rubenstein to-do list for them strategically to get out 10 years?
Well, it's amazing what the tech companies have done. Just take Tim Cook. When he took over, it was about a $350 billion market cap. It's now about $1.3 trillion, more or less. I was talking
adding $100 billion a week.
Right. Yeah. Satya Nadella, when he took over, maybe market cap of $350 to $400 billion, now about 1.2 or 3 trillion. These sizes are just staggering. And Herb Stein, the famous member of the U.S. Council of Economic Advisors under President Nixon, once said, if something can't keep going on forever, it won't. So at some point, I don't know when, it probably can't keep going on at this size. Generally, when you have something this big and you have it this profitable, usually the U.S. government comes along and says, hey, you're having too much fun here. We need to do something about that. But that doesn't seem to be happening right now.
Let's talk about what has happened over the last year. Some red flags coming out of private markets as they look to come public, and the biggest one was WeWork. Lessons learned from last year, what are they?
Well, I think when you have a fund that is very, very, very big, like the SoftBank fund, the Vision fund, you have to deploy large amounts of capital, and you can probably put too much money into one deal. And I think in that particular case, it appears that a lot of money was put in at probably a higher valuation should be the case. And then there were other concerns as well about corporate governance and so forth. But, you know, there are mistakes that are made in every generation. And this wasn't the first time this kind of thing has ever happened. It won't be the last. But I think a lot of people have learned something from that deal.
David Rubenstein, you are a great student of this nation's history. We had an extraordinary press conference from the President of the United States today. You've contributed to Ford's Theater, to the wonderful museum next to it. You've greatly contributed to our Library of Congress as well. What is your study of how this nation moves forward from the process of impeachment?
Well, it's a very strange situation. If you were to come into this planet from Mars and say...
Or from England.
Or from England or any place and say, you have a president of the United States who's being impeached, only the third president who's been impeached, and a trial is going on in the Senate, yet the economy is going along very well. The business community seems to be not affected by what's going on in the Senate right now. I was at the breakfast with the president this morning before the press conference, and it was clear that the business community is pretty supportive of his policies. You know, so it's a hard thing to kind of explain to outsiders that the economy is doing so well, and the president has a lot of support in the business community for sure, yet he's being impeached and tried in the Senate. It's hard to understand.
Just final question, just quickly. You were in that meeting this morning with the President of the United States. Did anyone ask him about impeachment?
Well, no, that question was not asked.
Not a single question.
Well, it wasn't. There was no opportunity for questions, really, because the president came and made a talk, and then his daughter Ivanka made a talk about what she's doing in the job creation area with Tim Cook and Ginny Rometty. So when they finished that, it was, you know, that was the whole
They kept the mic away from Rubenstein.
But I would say that that's probably not the audience that's going to probably ask those questions. It'd be my guess.
Yeah.
And so I think the audience that would probably ask those questions are, you know, probably the press people, and they weren't not in that room.